Alright, welcome back to the Divergences. In this channel we take a straight technical analysis approach to looking at stocks, so leave your emotions and biases at the door. Today we are looking at Robinhood. Take a look at my Twitter page here at Only Divergences. I've had this falling wedge here pointed out for some time, actually. And today we got a little bit of a breakout, so you can see it. This started all the way back last week when I just pointed out this falling wedge, which is a typical textbook technical analysis pattern. Did a little bit of an update, talked about patience, and then we had a little slow breakout. But I think that there's still some patience that needs to be exercised here, and let's talk about that a little bit. So we can see typically we start off with the weekly chart, but because Robinhood has not been trading for many weeks, we're just going to start off with a daily chart here. We can see this falling wedge, which really just means that the stock is coming lower, but in doing so, it's doing so slower and slower, indicating that the selling pressure is waning and that the pressure between sellers and buyers is actually starting to flip here. So what we expect is some time down here in this area, which we've had, and then a nice breakout higher. So with such a small amount of price data to work with, this will be difficult to pinpoint the exact time when we want to go long, but we have to look at the lower level time frames to see what happened today and what we should expect from a probabilistic standpoint. So we start off with the hourly. We see again that we had bullish divergence starting to play out. So this is how you look for bullish divergence. First, you look for a low on the MACD, right? So negative histogram, blue, below, red, that's what you're looking for. So you look for one low. So let's start back here just as an example. You start one low, then you have you look for a subsequent low that's higher than the previous low, and that's your entry point. So what does that mean? So say we start off with this low here. We see that it's a low, and we wait for a subsequent higher low. So we're not buying here, we're not buying here, we're not buying here, and then we have blue start to move below the red, and now we start to pay attention. Okay, so we're starting to form this second low, but we want this to turn up at this point here, right, to form a second low. Because if it doesn't, then we cannot have a subsequent higher low, because if it keeps going lower, then you no longer have a subsequent higher low, you now have a lower low, and you have to start again from over here. So after this fall, we have this new low. So what you're looking for now, and what I was looking for, was a subsequent low. I wanted to see the blue line come lower, which it did, but it didn't do so very strongly. So one thing that I want to point out is that I've been experimenting with this indicator up here, the DMI indicator. This indicator is a little bit more sensitive, and so when we have an elevated green reading, we should see this as equivalent to a negative histogram on the MACD. One other thing one can do when you get to this point, with a potential higher low on the MACD, when you're looking for this, is you can look to the lower level time frames for evidence of potential divergence. Any elevated green on the 15 should warrant further analysis, and if we pull up the 15, we take a look, you can see that at this area you're looking for a low, right? And you had that here, but then here you ask yourself if this is something that is very conducive for a material move higher, and it's really not. We want this second low, because even divergences play out on these low time frames. You can see this low here, which you can just see on the 15, is higher than this low, right? So you have divergence here on the 15, but you also have it on the hourly. So that's what I call nested divergence. We're going to be taking a look at that a little later. So we had this bullish divergence, and the first question is always, where do you enter? But the second question is, where do you exit? What type of a move can you expect? Will there be pullbacks? Will there be sharp sharp moves? Will there be gaps? So we have to have our objective entry, and we have that, and we look at that entry and we ask, what type of a move is it? One thing I want to note generally is that when we have a stock with falling average true range, that's this red indicator right here. You can see this line, and it's falling and it's getting flat and flat and flatter. The move higher will be the one typically that results in a material expansion of the average true range. This isn't always the case, but it is a good indicator. So what this means is that after seeing this reading fall and fall, there will be a point where it increases, and it will be the move, the one that we're looking for. This is not to say that this move from the lows yesterday was not a good move, but from an objective technical analysis perspective, this is what I want to outline. This is what I'm looking for. I'll be very clear. Even though I said leave your biases at the door, I have a bias, and this is how I think it will play out. But at least I'm objective with regards to my bias. I understand that I have a bias, and I'm using objective measures to offset that bias. So we're looking for an entry for Robinhood, and we understand the position that we're in right now. So what this tells me is that despite this being a nice bullish divergence, I really like this. It's really clean textbook. This is definitely going into the textbook for bullish divergence examples. I have less confidence that yesterday was the start of the move. Entry should be on elevated green and negative histogram. We don't have that. It should not be on elevated red on the hourly. Now, I'm not saying that the stock will not move higher from here. In fact, part of me thinks that we might gap higher and get faded. Pre-market, it is a bit lower, so we'll see. In the past, we've had instances where the stock has moved higher even with elevated red, so we can even see that here. So you see where the elevated red is here. You can see this horizontal line. You can see in past instances, we've had times when the stock had elevated red, but then continued higher. So you're essentially chasing this here if you go long at the entry, and there's going to be lots of volatility along the way. Personally, this is not perfect for me, and again, the reason why I've outlined is because we have this elevated red, which means that the relative risk to reward is not good. While I note the elevated red on the hourly, we can even look to the 15 and see this elevated red condition here, which so in the past there have been times when it has peaked above it, but we can see that generally this elevated red represents a limit with regards to upside potential, immediate upside potential. We're talking about immediate moves here in the market, but then again there have been times when it hasn't. But you have to compare this setup to this setup, and that's where the tricky discretion comes in. Therefore, we want something that has more elevated green, or at least falling red, which indicates that it's time to enter, and that we want to see it on the 15 and the 30. If we can get it on the hourly, that's fantastic, but part of me thinks that we might not get that. And we want bullish divergent potentials, and we want divergent bullish potentials with negative histograms and touchbacks to the midline on the MACD, on the 30 and the 15. It's got to be at least on the 15, because if we don't get that, then we're not going to have the required energy for the stock to break out and move higher. So while Robinhood is rising from its lows and may rise again today and tomorrow, the risk reward is not as good as it was, let's say, yesterday morning or Tuesday before the close to go wrong. I hope that this idea makes sense. Right, that there was more meat on the bone yesterday morning than there is right now for going long. If this divergence is enough to push Robinhood higher from here, then that's fine, and we're not going to be chasing it. We're not going to be entering it because it's not optimal entry. But if the near-term overbought conditions are enough to pull the stock back, then the question is, what do I look for and when do I buy? So we would need to have a pullback on the MACD. We do not need 60 to show negative histogram, but we would like to have at least on the 15. You want to buy on a pullback, and you want to be paying close attention to the MACD on the 15 and the 30, as well as the DMI. You want to see rising green, but at least falling red. Do I think that today is the day when the stock will move higher? It could, but that's really not the question that you need to ask yourself. The question that you need to ask yourself is, at the open, do we have what looks like objective entry from a probabilistic perspective? The answer, I think, is no. So we're going to be waiting here today. Today looks like it could shape up to be a bit of a choppy day. I'm looking at futures right now. It's 8:45. We could get some chop, but I just wanted to update the idea of Robinhood that I've had for some time here. But I do think that in the coming days, we should see a move higher. But I'm willing to wait and be patient, because I think that there's still a bit of time before we get the right perfect entry. Alright, thanks for watching this video. Remember to like this video and subscribe, and keep watching because I will keep updating all of these stocks. Thanks again. Have a great trading day.